So when you're buying a house, there's a few things that mortgage brokers look for. I myself am a mortgage broker, so I can help you with your financing needs. And with one credit pool, we can shop up to 49 different lenders. But what happens is what they're looking for, it is broken down into ICAM, income, credit, assets, and pretty much motivation or timeline. This video is going to talk about credit and what goes into factoring, like what your FICO score is. And I'm going to give you like a breakdown percentage wise of how they calculate your FICO score. So maybe this would help you get prepared to buy a house in the future after you learn about what's in this video. My name is Joe Denny Ogando. I'm a licensed mortgage account executive in Central Florida. And what that means is that with one credit pool, pretty much I'm a mortgage broker. I can help you figure out which lender would help you with the best scenario, based on what you need to do. Now, the difference between you shopping with like a mortgage broker and a regular lender is the lender is going to give you just what they have to offer. Since I work with multiple lenders, I'm able to see what multiple lenders have to offer. This video is going to break down what goes into your FICO score so that you can know how they calculate the score and you can do your best to basically work on getting your score improved. So right off the bat, 35% goes towards your payment history. So 35% is what's your payment history. So basically paying your bills on time is the biggest chunk of like your credit score. In some scenarios, depending on, if your file comes approved eligible or not at the beginning of the process, if you have like more than one late payment, that actually can also hurt you and it might delay the process of you being able to buy a home. So try to stay on time with your payments as best as you can, or work out some plans with the creditors. Don't just ignore them so that they don't have to report your payment as late, because you'd be surprised if you're trying to buy a house and then you have 2 or 3 late payments from 9 months ago, but now you got all this money in the bank and your score is good, but then what's holding you back is that the late payments are less than 12 months old. 30% is going to be the amounts that you owe. So all of the amounts that you owe will factor in to be 30% of your FICO score. 10% is going to be the mix of credit. So the different types of credit that you have will be 10%. 15% will be the length of the credit history. So the longer you keep the accounts open, that would help with that percentage as well, with the length of the credit history. 10% is going to be new credit. So 10% will be any new credit that you have as well. Now, just because you may not have a score that you think is good enough to buy a home, it doesn't mean that you shouldn't talk to me. What actually happens is when we run credit, we have different simulators that we can use to basically see what would get you to the next score. Now, when they're using your credit scores, they're using the middle score. So there's 3 different scores. They'll take the middle score. When we're running the simulations to see what would get you to the next level, we'll run the simulation on all 3 scores to then see what the new highest middle score would be. So it still makes sense to reach out to me, even if you think you may not be ready, because once I run credit, we can create a game plan for you to help you in the future. If you found any value in this video, consider subscribing to this channel, drop a like on this video, drop a comment as well with any questions as well, so I can make future videos also based on that. And the best way to reach me is on my website, www.joedenny.com. So it's Jodenny. And on my website, you'll see my contact card, and on the very bottom, you'll see like a link to my calendar where you could schedule time to get on the discovery call.